The nation's central bank is raising interest rates by 50 basis points. It's the highest single spike by the BOK and the first time rates are raised 3 times in a row. Eum Ji-young zooms in on the efforts to bring down inflation.
South Korea's central bank has raised its benchmark interest rate by 0.5 percentage point for the first time in history. The decision was made following a monetary policy meeting on Wednesday to raise its key interest rate to 2.25%.
The Monetary Policy Board has unanimously decided to raise the key rate by 50 basis points, as there is the greater need for preemptive measures to stabilize consumer prices.
The 50 basis point increase, the so-called big step, is the largest single increase by the Bank of Korea since it implemented interest rates as its primary policy tool in 1999. This also is the first time ever that the bank has adjusted the rate upward 3 times in 3 straight meetings. The central bank's main drive for the unprecedented hike is to rein in inflation, running at a near 24-year high, and the bank said it's going to stay above 6% for a while. One expert says the rate hike is expected to help stabilize consumer prices.
The public's expectation of inflation is growing fast, so the Bank of Korea is signaling the stabilization of prices by raising rates, which can help suppress the rise in consumer prices and wages.
She said the rate hike could also help prevent a further weakening of the Korean won. The won has tumbled more than 9% against the US dollar this year, taking the exchange rate to a 13-year high. The rate increase also followed U.S. Federal Reserve's aggressive interest rate hike of 0.75 percentage point last month, the sharpest one-time rate hike in nearly 30 years. Amid concerns that interest rates in the U.S. could soon surpass those of South Korea, the bank said it is likely to maintain its tightened monetary policies.
It is desirable to gradually raise interest rates by 25 basis points for a while.
However, the expert says there could be side effects from the big step.
Household and corporate debt have been accumulating since before the COVID-19 pandemic economic crisis. With mounting debt, private spending could go down. Also, it could lead to further polarization of society, as those in low-income groups are likely to be hit harder.
The Bank of Korea said it'll look for ways to support socially vulnerable groups who are likely to go through greater difficulties due to the rate hike. It'll also maintain a 0.25% interest rate for loans to businesses who have suffered losses because of COVID-19. Eum Ji-young, Arirang News.